Welcome to another episode of Face the Trader. Today, we're thrilled to have Roy Levine with us. Roy is a highly skilled technical analyst and a professional crypto day trader. He's also the founder and CEO of Bulletproof Traders and the mind behind innovative trading approaches like the Profecision trading model and the cross price matrix trading methodology. Roy's expertise and forward thinking strategies have garnered him a strong following in the trading community. Thank you for joining us today, Roy.
My pleasure. Happy to be here.
Awesome. Love it. Let's jump into a little bit of your personal background and maybe you can tell us about your journey into trading.
Yeah, wow, that was a long time ago. It's been 20 years since I started. Um, yeah, I always was drawn to the capital markets and I always heard about stocks. Always was appealing to me the uh, the ability to make money from buying and selling a stock, which is like a digital kind of asset. So I was drawn to that from relatively young age. And as I was doing my bachelor's degree in economics, I was starting to specialize in capital markets, analysis of capital markets, and everything that relates to that. Uh, so so that's how I started off. Right after I finished my bachelor's degree in economics, I went straight to work as a dealer in a foreign exchange company, entering the phone, making the deals for clients, buy, sell, euro, dollar, this, that. And that's pretty much where I started I was fascinated by technical analysis as a way to read the market, to interpret the market and come up with, conclusions regarding where the market's going to go, right? So that was my whole, like I was really diving into that rabbit hole and trying to jack up my probability, my success rate, right? My chances as far as reading the market. Yeah, it took me a few good years to understand that it goes much deeper than that. Like, I was going online. I was reading every book that you can find, everything about analyzing the market, technical analysis, fundamental analysis, all kinds of techniques and methodologies from here to the moon. There was a lot of trial and error for a few good years. I became a certified financial technician, which is a master technical analyst by the IFTA, International Federation of Technical Analysis, right? So I was certified technical analyst, yet still couldn't figure out how to analyze the market properly, and I was still kind of losing money. I was just trying to float and eventually crack the code, beat the market. But it took a few good years for me to realize that whatever is on the public domain, as far as knowledge and information, is probably not going to work because if it would, everybody would have been rich, right? Everybody can go to Google, how to analyze the market. You'll get all kinds of methods and techniques. Yeah, but it took me a few good years to realize that stuff not necessarily working, and I had to do something else. I had to approach this from a different angle. I had to take this to someplace else to raise my head above the crowd, so to speak. And slowly but surely, I figured it out. And that's where I started to actually kind of develop my own trading style, um, entangled with trading methodology that I've developed literally by trial and error. And then basically kind of built something that was a different animal than whatever you would find online and in public domain. and it just grew stronger. And the more I was trading, the more I was, applying my trading methodology, the better I got. And I'm still getting better. It's an endless journey where you can always get better and improve and get better and so forth. So yeah,
Yeah,
here we are.
that that is trading, and I think from like all of the successful people that I've spoken to in the markets, they've all gone through a process of trial and error, like you mentioned. I don't think there is a like a one size fits all for traders. Um, the trial and error part is definitely a key to it. In terms of the trial and error aspect from you, like how did you survive that? Because when you losing is never fun, and then like giving up is always pretty damn easy.
That's a great question. I got to tell you, I don't even know how I was able to withstand all the low points. Lots of failure in the first few years, losing my money, losing family's money, losing friends' money. It wasn't fun. But I knew that if I only if I just keep going, right, pick myself up, dust myself off, back to square one, trying to figure out what the hell was I doing wrong, and just keep putting those trades in. I knew that if I sustain that, at some point I will beat the market. And after a few good years, I started realizing that I'm not losing anymore. I wasn't winning necessarily. I wasn't making money yet, but I stopped losing. I stopped bleeding money. So that for me was a sign that I am doing something right. I just need to keep going. And day by day, I've been like my first trade that I've placed in the market was literally in the 1st of August 2007. So it's been 17 years. I just kept going, and there was not a single day ever since August 1st, 2007, where I didn't have an open trade in the market, and that's still the case. So yeah,
And well, we you are the Jedi of technical analysis. I've read on your some of your stuff in your site, and you said you got the certified technical analysis. What exactly does that mean? Like, what kind of knowledge and expertise do you get from that, and how have you applied that?
so in order for me to get that certification and become, a certified technical analyst or a master analyst, I just needed to have a deep knowledge of all the techniques, all the methods that there are in the public domain as far as technical analysis goes. And I really did have a vast knowledge on all of these, techniques, this GAN or Fibonacci, all the indicators, the oscillators, the Bollinger Bands, all the good stuff, right? I had a vast knowledge about all these things, so they would just test my knowledge. They just wanted to know if I have all the information, which I did, and yeah, I passed those tests. Again, but like I said, it didn't help me to become a good trader. It didn't help me to become a profitable trader. In fact, what it showed me was that yeah, I have to find my own way in that niche of technical analysis, because the stuff that were right out there, in public domain were not serving me properly. So I had to become a master technical analyst to understand that it doesn't necessarily work, and I have to find something new, to invent something new from all of that information that will give me that edge, that will give me that advantage over the market. And yeah, I mean, it's not an easy game.
Well, I
It
think
really
that's
is.
going to lead us next into talking a little bit about precision in the cross price matrix. But before we do that, just to understand, like, to be a certified technical analyst, like, what exactly does that mean? You know how to do? So it means like, hey, I see a flag or a hammer or the different patterns, but what does that what does that mean aside from like being able to identify different patterns? Um, what exactly goes into that?
Well, they wanted to see if you control all kinds of different methodologies, all kinds of different techniques of trading, and if you are, then they will give you a case of just a naked chart, and they will ask you to analyze it and to come to conclusions according to that particular technique or method. And I was on top of all of those, so it wasn't a problem for me to just demonstrate how I analyze the market, and they will give you all kinds of different time frames, and you would have to integrate those time frames into, if it was Fibonacci, then you would have to show why you got to that decision, why you're making that particular decision, and everything according um, that particular technique and the way they were presenting it. You know,
So it's not just reading the charts; it's also all of the different indicators that are involved in that as well.
right? They would want you. They wanted me to show all kinds of different techniques for analyzing a particular asset and coming to conclusion and placing a trade. And then, of course, the risk management goes into that. I mean, the entry strategy, the exit strategy, right? Stop loss, take profit, the way you handle, the way you manage the trade during its lifetime, those kind of things. But yeah, so I got to that level where I was able to take those exams, and I did that, and I became a master technical analyst. And that was, yeah, that was it. But I've had so much progress since then. It's ridiculous.
It feels like
It's
that's just an introductory course to trading, right?
exactly, exactly. It was just a foot in the door, so to speak, to the world of trading. But it was just the beginning.
So tell us. So this leads us into. Am I saying this correctly? Precision. The
Precision, right? So precision came to me a little bit later down the road. Again, almost by accident. I swear, it was just trial and error. And you throw a bunch of stuff on the wall and you see what sticks. And whatever that sticks, you take it and you start to work on it. So for me, it was the Fibonacci trading methodology that I found very interesting. I mean, we can start talking about Fibonacci from now to the end of the podcast, right? Because it's such a remarkable application, not just for trading, right? For so many things. I mean, Fibonacci numbers are everywhere. And it just made sense to me that if they're, Fibonacci numbers, the sequence, or should I say the ratios, are practically everywhere. If it's in space, if it's animals, if it's plants and flowers, if it's our own autonomy, the distance between the fingers, the distance between the forehead and your nose and your mouth, they're all Fibonacci ratios, right? All the galaxies, everything is controlled, or it's kind of the rhythm of the universe. So, and then applying that to the market, I did find in many cases um, the market was really working according to these ratios. However, it wasn't enough to break the market, but I saw something there, and I took it out, and I started to focus on the Fibonacci methodology. And then again, a lot of and in the Fibonacci, or at least the stuff that we know from public domain, that's applicable. So there's the correction side of the Fibonacci, where you would apply corrective levels to assess how far a correction is going to go. And then there's the other side of it, the flip side, the projection side of the Fibonacci, where you can literally measure a move from top to bottom and have that projection measurement. Those are the numbers that goes above 100, right? So like the most popular Fibonacci ratio, the golden rate is 61.8, right? But that's again that's a correction measurement. But if you go 161.8, now you're going into that projection space where you measure a move and you extrapolate into the future to see what's the upside potential, what's the counter move projection. So I just started to play with those constantly on a daily basis with stocks, with foreign exchange. There was no crypto back then, but a lot of stocks. I was trading the FTSE 250. I was living in London. I was doing this technical analysis mastery in London. So I was just, yeah, tons of trial and error. And almost by accident, I stumbled into a pattern. I started to notice a pattern when I was applying a very specific Fibonacci numbers. I found a recurring pattern that I see time and time again. And from that, I started to branch out into slightly different numbers that I was applying in my measurement. And I discovered a whole new way of analyzing the market, mostly in those stages where it's consolidating, right? So the market acts in two different ways or forms. It's either trending, it's running, or it's consolidating, it's taking a breath where it would trade sideways for a while and then pick up either a breakout or a complete breakdown, which would be a full-fledged downside reversal on the large scale. But anyway, I would be focusing on those consolidation phases, and through those Fibonacci numbers that I came up with, um, I started getting that edge where I could trade the lower side, wait for price action to go to the upper range of that range, and then sliding back downwards. And I was able to dissect the market as far as whenever it's consolidating versus whenever it's trending, so I would know where my edge is, and that's where I would pull the trigger. But again, I'm just oversimplifying it, right? I mean, it took me a few good years. I'm talking about a few good years to master that, to master my craft, so to speak. And that's how Proficision came to life. It only came to life where when I started to approach it very systematically, right? Like I would not leave room for free choice, right? Things had to happen in a certain way for me to act in a certain way. So whenever it became a full trading system where I would know exactly what to do when whatever was happening, it was very systematic. That's where it became a trading system, which I call Precision, because it's not just precise, it's also very predictive. It's a predictive system where I get to be right on wherever the market is going with a relatively high probability rate. I'm not always I'm not always managing to get a trade in profit because there's a stop loss level that you apply as an insurance policy, because we know every now and then, a few years, it could happen in once in a few years, there's that black swan event in the market where it's completely, I mean, the market's not logic at all. Something's up, something's happening, geopolitically or whatever, and the market just goes berserk. And that could wipe out accounts, right? It could lead into 50% loss, 60, 70, whatever. So you always have to apply that stop loss level as an insurance policy. But there is a downside to that, right? It's a double-edged sword. because it will also trigger your stop and then continue to the same direction that you thought it would go. So, but again, it has to be done. Nobody wants to wipe out an account, a full account, or 50%. You're working hard to get those 3, 4, 5, 6, 7% a month. So stop loss level has to be applied. But yeah, so as far as the prediction side, I would have a high percentage of success with predicting where the market's going to go because of that trading system, trading methodology that I've developed. So
And
the
then how
cross
does that?
price, so the cross price metric that you mentioned, that was the beginning of it. That was the methodology that I've developed, branching out from Fibonacci, but then making it, bringing it to the point where it's systematic, where I know exactly what I need to do. I don't leave, room for spontaneous behavior, right? That's where it became a trading system that I call Precision, in a nutshell.
Got it. And then I guess what is the cross price matrix?
Well, that's the extension of the Fibonacci trading methodology. The way I was able applying Fibonacci, well, my own Fibonacci numbers, applying those numbers on the market would help me to dissect the market in the sense that I can identify that this is the stage where pricing is consolidating. This is where I need to focus. This is where I need to take action. Um, and of course, I teach that methodology as well. If it's coaching and mentoring, if it's in a trading course, I help traders and wannabe traders to hone in. I show them the ropes and I help them to hone in on that trading methodology. But again, this is just the first step, so to speak. Then again, you still have to find your way of designing that trading system that is um, part of, well, it's part of also, I mean, a trading system has to take into account your risk preference, your timetable, how flexible you are. Just it's kind of represents your personality more than the actual trading analysis, the actual analysis of the market. You know what I mean?
Yeah.
Yeah.
And then how did you get involved with the crypto markets, and how do you like trading those? Because that's your main bread and
Yeah.
butter these days, right?
Right. Right. So cryptocurrency market, crypto trading would be my bread and butter these days. The crypto came into, I mean, it really started to pick up around 2017, I would say, maybe 2016, 2017. That's where the Bitcoin began to explode.
Once it got above 5,000, people are like, "All right, what is it?" It went from 5,000 to 8,000 in just like
Right.
a couple of days, and then everyone's
Yeah.
like, "What is this?"
And
Yeah,
by the end of 2017, it was already almost touching 20,000. That's
yeah,
where it
hit
became like,
20.
a phenomenon, right? Up until then, I was like, not so sure about that market. Not so sure about that Bitcoin. Where is it come from? What is it all about, right? So I would still look at it from time to time. At the end of the day, we're supposed to analyze everything that goes up and down, right? I can analyze commodities, right, and futures and even bonds. Doesn't matter. Goes up and down. It's You can analyze it. It's possible to analyze it and to come to legit conclusion. But it felt like the crypto at the beginning felt like just a big hype, and maybe there's nothing behind it, just hot air almost. Yeah, but slowly but surely, I started to realize it's actually the future, and I better be on top of it. So I just started to approach a few different markets at the same time, but the crypto market, there was something about it. I don't know. I guess because it's a new market, right? If you compare the crypto market to the Dow Jones or the S&P, we're talking about this system. The stock market goes more than 100 years now, and the crypto market started to realize it's a very new market. It has so much growth potential. So it's probably like the internet in 2000 in 1994, right? It's still small, doesn't work so well, not everywhere. It's only some places, but you could have known back then also that this is the future. It's just a matter of time until it takes over, right? So I started to realize the crypto market is kind of the same. Sure, you still cannot buy with Bitcoin everything you want. It's not there yet. You cannot go to a store and pay with Bitcoin. There are stores that you can do that, but most of the store you cannot do that yet. I realized that's the future, so I started to focus on that. And once I started trading the crypto market, heavily trading it, like on a daily basis, which I did with the rest of the market as well, most foreign exchange market, I started to realize that there is it's almost like an innate, built-in direction, which is up because the market is growing. So sure, there's periods of time where it's going down. There's bear cycles along with bull cycles. But at the end of the day, if you take a if you step outside and look at it from the big picture, you can see that there is a bigger trend. Same with the Dow Jones. Take it 100 years back. Sure, there's big drops and prices during those 100 years, but at the end of the day, it's going up because it's growing. It's growing. The population keeps growing. Companies become more efficient, and learn how to make money more efficiently with less cost and less. And the crypto market, I thought it was just really the beginning of the way. It has so much upside potential that it would only tend to go up. And with that tendency, I can work even better. Because to think about it, the currency market, right, the foreign exchange market is more like rangy. Instead of growing one way because it's one country against the other, right?
Yeah.
It's one economy against the other. So one that
This is just Bitcoin versus the US dollar, which, yeah.
exactly. So we call it a zero sum game, right? A zero sum game. That's pretty much what the forex market is. So I felt like it was a little bit harder to predict the direction over the long run. And I just felt it. I started to notice it in the bottom line, right? In the profit and loss bottom line, I started to notice that I was doing better in the crypto space. So I started to refocus, recalibrate my energy, my time, my efforts more into the cryptocurrency market, mostly doing the top 20 or the top 50. I wasn't going to the small ones that are really crazy. I mean, unless you have some inside information about a new coin that popped up, it's a risky game, right? It's like
Oh,
trading.
you got to follow the meme coins, right?
Yeah, the blue
Was
chip.
there's a kid who pumped up his meme coin to 30,000, then he rug pulled it, and then the community put it all the way up to 30 million and
Exactly. You want to
150
have
million.
right. You want to have those coins that have that fundamentals, right? They're established, they're heavily traded, and that's what I was focusing on, like the top 50. And I still am. So that started around 2017. So 7 years ago. So basically, I've been trading crypto for 7 years, but in the last couple of years, I really put my focus on that market
So the top
almost
50.
exclusively.
So for me, it's like, okay, there's Bitcoin, there's Ethereum, there's, a couple other, the Solana, a couple other big ones, and then everything else is scary as heck.
um, I wouldn't say so. I mean, there's like a few dozens that are really well established, and I don't think they are going anywhere. Sure, there is that ranking competition between those two. I mean, Ripple used to be number three. Litecoin used to be number three. Now it's
Yeah,
number
Litecoin,
20.
yeah,
Litecoin dropped quite a bit. So there is some fundamentals behind it, as far as the technology,
uses, yeah.
and yeah, yeah. But yeah, I feel like the top 50 are probably here to stay, maybe with the exception of this coin or that coin. but they're pretty well established. And yeah, I really let the market lead the way as far as looking at like 20, 30, 40 assets, just looking for the trading opportunity where it's coming from. According to my, again, to my trading methodology and my trading system, I can locate, identify those trading opportunities from a technical standpoint and just hit it. Focus on the three, four, five assets that I see a strong trading opportunity from a technical perspective. Just focus on those. Get hit the target, hit the stop loss level with one of them, and then again reanalyze or should I say rescan the pool of assets that I have and just drawing the next opportunity and just focusing on that.
So you mentioned cryptos. They, unlike currencies, cryptos, they generally go up in value and continue going up. I guess it's hard to compare to FX because FX moves in ranges and it's a zero sum game there. Effectively, I think, well, cryptocurrency is different because if it's based against currencies which are perpetually dying, it's not essentially a zero sum game. I don't know if you would call it that. It's more similar to, I guess, stocks. I guess that.
Exactly. That's what I'm saying. Exactly. It has that built-in innate growth factor. So the market wants to go one way. It wants to go up. It has that tendency to go up, and you can take advantage of that kind of type of behavior. You
uh,
know,
This is like a light bulb moment for me because when a currency is priced against another currency, you generally have one direction, but the thesis, argument, or theory, whatever you want to call it, is that Bitcoin will continue to go up as there's more dollars that are coming into the system, and so the dollar will be devaluated as a result.
right? Because they print money like crazy, right? So obviously, we know fiat money is just declining constantly, potentially until it's dead. Some think it's going to die, like the US dollar is dying because they keep printing it, right? So they devalue it all the time. It's not a problem. There's a debt that needs to be covered. Let's print more money. But the thing is, you cannot print more Bitcoin, right? It has that finite number of coins, and that's it.
Yeah.
And it's true with the rest of the coins. So I feel like obviously that's the future. I wouldn't want a cashless society. Don't get me wrong. I wouldn't want that. Um, but that's not the discussion here. Like the discussion here is whether the cryptocurrency market is going to grow and be more popular to the point where people are just going to start using digital money to buy things on a regular basis, right? And I feel like that's
Well, we are using digital money. Like I went out for dinner the other day. I made a reservation for me and my wife for dinner, and the guy like went above and beyond. He like put a champagne bottle on the table, a card saying, yeah, congratulations, and glad you're coming to our thing. And I'm like, man, I don't have any cash to tip the guy. And I was like, nobody uses cash. I'm like, it's all card.
right, right. But it's so inefficient, right? Like for example, if I want to transfer money now from a different country, right now I'm in Canada. Now, if I want to transfer money from Cyprus, which I was the other day, it took 4 days to get there. I mean, what are we talking about? Was that money being carried by camels over
Yeah.
the ocean? Like, why would it take digital assets, right? Digital money. Why would it take 4 days to get there? And why was I commissioned so much? What is going on, right? So that's why it's so inefficient, and
Well,
it's bound to get replaced by
an
those things.
11-year-old me, an 11-year-old me who just got his check for his birthday from his grandma, goes to cash it, and he's like expecting to go buy that video game that he wants to buy
Right.
today because he's going to the bank to cash it, and the bank says, well, it's going to take 3 to 5 days to end up in your bank account because your grandma gave you a check from another bank and we're another bank, so we're going to have to take time to cash it and do all that. And I'm like,
Sounds
this is
ridiculous.
so inefficient.
And then comes the cryptocurrency market, right? And you transfer money like in seconds. It was minutes, but now it's literally seconds. It's right there. No commissions, almost zero, literally close to zero commissions. So far more efficient. And if something is far more efficient, it's just bound to replace the old and inefficient system
So
that we're having
I
now.
agree with efficiency, but there's also the AML, the money laundering, all those
Right,
things. And you
right.
have in the EU moving towards KYC wallets
Regulating
and
it.
yeah, regulating it, but everyone's still gonna there's still gonna be ways to have your wallet off the system and things like that.
Now, of course, there are some downsides, like everything else. Um, the complexity of dealing with codes and passwords and pins, and you can lose your own money just by forgetting your password or your those 12 word
Keywords, yeah,
sequence,
16
yeah,
keywords.
pass,
Yeah.
yeah, whatever. And it happens, and it does happen. Obviously, that would be the downside to it. But at the end of the day, I kind of like it that I have the option to hold my bitcoins physically, right? These days you have those nano devices,
The ledgers, yeah.
the ledgers, where you can just download your crypto assets into that ledger, put them in your pocket, and there you go. You have your Bitcoin in your pocket. It doesn't have to be in a custodian entity, that keeps your money. I'm just saying. So yeah, and we know that there were in the past, right? Crypto exchanges that went down. There was that Canadian crypto exchange, Quadriga. I don't know if you remember that
Quadriga, yeah.
Quadriga, where the
I
owner
called it,
just
man. I'm like, how could anyone have such a premium on the pricing on the spread gap between everyone's like, yeah, let's put our coins over there because like they're selling it at you can sell it at a premium. I'm like, it doesn't make sense that they're selling at such a high premium, like up to $3,000 premium versus what it's being priced at other exchanges. I was like, this is just gonna end bad.
right. It smelled fishy, and eventually the owner just disappeared, never to be found, and
Yeah,
took with
maybe it was in
him.
India, so he's probably reincarnated.
I hear a, I hear a lot of stories about that. People, yeah, suspect obviously he's still alive somewhere, but he took all the passcodes with him, or something along these lines, and a lot of money was lost.
Yeah.
And there were other cases of hacking, right? Hacking. That's another thing. But again, I do believe that those are part and parcels of a new entity. Comes with some bugs and issues, but those are getting solved on a daily basis. At the end of the day, I do believe the crypto market is here to stay. It's not going anywhere.
Yeah, it's here to stay. That's for sure. Like from everything that they've thrown at it, everybody still keeps operating it. I think
Right?
I think the adoption rate here is different because I'm talking to a lot of millennials, Gen Zs, and alphas, and the Gen Zs are very, very wary of scams that are going on online and stuff like that. So the the original, like, I think new people coming into the space isn't quite as high as it used to be, but I think there's still it's not going anywhere. That
No.
I would
Right.
say, unless there's some form of ridiculous regulations or rules that come into place.
Right.
I don't think so. Yeah.
Which looks like they are coming. I mean, the inception level that we call it, the inception level is a little bit below my expectations. I mean, I thought back in 2020 that by 2024 we're gonna have ATM Bitcoin ATMs in every corner. Now that's not the case yet, although they do get more and more prevalent. But yeah, yeah, there's a few issues, technical, right, technology wise, that needs to be fixed and solved, I guess, before it's going to take off massively. But it's going that way. You can see it. So it's a no-brainer for me.
Have you seen like the recent comments from like Michael Saylor and his master strategy or micro strategy?
Which no, doesn't
Uh,
ring a bell.
no, because he's just been online the last like week as everything's been pumping, and he's like, "Yeah, our stock is trading great." He's like, and like all he's really doing is buying Bitcoin with it, but then he's like creating all these complicated derivatives around it. So I don't know. After he went online speaking, the market kind of punished him a bit. The stock went down about 30% in terms of pricing or value. But yeah, it's just still unpacking everything he said. I'm still confused. Like, and anytime something is so confusing like that, I tend to stay away from it. It's like, when something sounds too good to be true, but yet they explain it in a whole bunch of word salad that means like absolutely nothing to you. Like if something really is that good, it should be easy to explain, and easy to understand. But essentially, he's buying Bitcoin, then he's buying and selling Bitcoin all day long, hundreds of times per second. So he's got some crazy arbitrage strategies that are going on, and
Mm,
then he's got some other things where he's building derivatives based on all the crypto that he's holding. So he's effectively like lending it out, potentially his crypto, getting money back, then using that money to buy more crypto, then
mm.
getting more. So it seems like a perpetual Ponzi scheme that he's doing. And the only way his strategy works is if the price of Bitcoin continues to go up.
Exactly. Exactly. And we have been witnessing a harsh bear market, right? Since I think it was like a 2.5 years during 2018 and 2019 that the market was just tanking from the
Yeah.
levels of 20,000. I think the Bitcoin went from 20,000 late 2017. It took it 2 years to get to 3,000. So that's like what, 80% or 85% loss
Yeah.
in value. So that's massive. You don't
So,
want to
so I
be
guess we're looking.
shedding 80%, right? It's impossible. So obviously those people are gonna get punished, but where it's bull cycle, everybody's making money. It's all
So,
good.
so I guess we should wait for it to get to 20 or 30K to go all in.
That's what I'm thinking. I mean, it just hit that 100,000 mark. That's a
Yeah.
huge psychological, nice and round number. And I wouldn't be surprised if it goes 50% off, like
Yeah.
pretty damn quick.
Yeah, I would say
Wouldn't be
you're going to see
surprised.
some crazy stuff. You're going to see it hit 100K. Then once it hits 100K, I think you're going to see it shoot through it to kind of clear up any shorts that are around the 100. And then once it's there, you're going to have massive pressure, people loading and trying to sell it for like 105, 110. So like
And
it'll hit
exactly.
100, it'll go down, it's either
Yeah.
going to hit 100 and get smashed down or go a bit above 100
Right. To
and then
draw
get
more
smashed.
buyers to squeeze them out on the turnaround.
Yeah.
That's what usually happens. I completely agree. By the way, I'm just now at that phase where I'm being a lot more cautious. Right, we're so high. We're looking down almost like over a cliff, and that a little bit scares me, especially in terms of long-term holdings. Because I do long-term holdings, but at the same time, I'm doing day trading, which is a completely different animal. Like when I'm doing when I'm day trading, it doesn't matter to me where the market is going. It doesn't matter to me where the underlying trend is going, right? Because I'm all about in and out, in and out. I can go down just as much as I can go up. So that's a different type of approaching the market. But as far as long-term holdings go, I'm definitely out right now, completely out from the cryptocurrency market. It's just I feel like it's way too high, and there's a lot of downside potential, maybe lurking around the corner. And I want to make sure, like you said, if it starts to crash that 100,000 mark and establish itself above that area for a while, then we can probably safely assume that it's going into the next stage of that bull market. But we have to be careful because it might be a bullish trap. like you said, drawing in those buyers just to squeeze them out on the turnaround.
Yeah.
Yeah.
And how? So if we're using Precision or cross price matrix, what would we? How would we maybe apply it to the current state of, let's say, Bitcoin right now? Because we're on that topic.
So as far as the the Precision system is purely day trading system. So I would look for those consolidation phases to apply my trading system, but I'm going to do it on the smaller time frames, right? Such as the daily chart, the 4 hour chart. Those kind of represents the short term cycle. The short term cycle can go anywhere. Um, as far as the long term perspective goes, uh, the market is in such a bull run right now that I just and we've reached some really critical milestones, not just with the Bitcoin, but with other currencies or other coins as well. So for me right now, the system's telling me stay away. Long term perspective, stay away right now because we're in uncharted territory. Just the Bitcoin hitting that 100,000 mark, there's nothing above it, right? It's the first time it's there.
Yeah.
Uncharted territory. There's no point of reference to work with. There's no key level resistance that we can look up to. We're literally in outer space. So system is telling me be careful. That's what it's telling me to do because I would need price action to establish itself in these levels, start to trade a little bit sideways, start to have some correction, get more data in and more reference points in to start working shorter. So I'm like I'm almost at the passenger seat right now as far as the market goes. A little bit less involved, a little bit less aggressive right now.
That's pretty rise heading into the end of the year.
Right.
It's better
With these
to,
levels. Yeah.
yeah. It's December is going to be a crazy month, I think. And well, it's actually Thanksgiving tomorrow, so that should be don't trade on
Yeah.
Thanksgiving.
Exactly. So in those periods, I just tend to shift a little bit more towards the foreign exchange market. So I'm a bit more heavy on the foreign exchange market right now. I have a few big positions, smaller positions in the crypto market until I feel safe to dive in head first. But I always have an open position. Always. It's just the weight of the positions, the number of the positions, right? That's how I would scale in, scale out according to the time period we're in. Yeah.
Nice, nice. And I guess kind of we're getting close to the end over here. I guess what would be some secrets to trading that maybe you could share with some people, or some or some tips?
Secrets for trading. That's kind of, I like that open question. Um, I think the biggest thing is just to keep going. Don't give up. It's easy to give up. You lose some money and it takes all the air out of you, and you're thinking, this is not for me. The thing is to build a thick skin, which you need, it has to be gradual. So the risk you're applying, the risk you're taking on yourself have to be gradual. And here's the most important thing I would say to anybody. Until you have at least 6 months of live data that suggests that you're either breaking the market or either even with the market is also a good thing to be in. But until you can show these at least 6 months of data, and I'm talking about at least also, so it's either 6 months, but also at least 400 to 500 trades because you can't be just having three trades throughout 6 months, and they happen to have they happen to profit, and you're like thinking, okay, I can beat the market with these five, four trades I've did over the last 5 months. Doesn't work that way. It's a numbers game. So until you have that 6 months of perpetual trading and 400 or 500 trades that you have in your pocket that can suggest that you're doing something right, until that point, I would not load up other people's money. I wouldn't play with my family's money. I wouldn't play with friends' money because those friends are probably not going to stay friends for long. And I wouldn't take huge risks, right? I would stay small, betting on money that I can allow myself to lose without shuddering my world. You know what I mean? Just build that data, just build that track record, build that confidence, build that systematic approach. Because even in a systematic approach, it takes years to really be systematic about it and not just have that intuition or feeling. Because once you start to incorporate feelings and intuition, that's where things starts to go sour. So you need to have that solid database track record of systematic approach for 500 trades that suggest that you're on top of it. You can beat the market now, even if you're not beating it by a big margin. I think that will give you a lot of confidence to just keep going and keep developing your skill set, keep improving, keep you know sharpening your tools.
Love it. Success doesn't happen overnight.
No,
It's a
requires
gradual
patience.
thing.
Yeah,
It's a good tip.
I
If you're
hope
going to
so.
do it for the long run, and
Exactly.
don't burn any relationships with family and friends.
Exactly, because that would motivate
That's why they
you
have
to
funded
go and
trader
do
accounts
something
now.
else.
That's why they got fun. Blow the platform's
Right,
money, not your own money.
right. The perp firms.
Yeah,
Yeah,
perk firms.
perp. That's how they call themselves. Perp firms. Yeah.
What? Why perp?
Um, what's the word? Perpetuary,
Perpetual.
perpetuary, per, perpetuary. It's like a fancy word of something unique, something original. I don't know why they chose that name, but that's the industry. That's how it calls itself. We're talking about those companies where you just pay some subscription fee and you're getting an account, right? A real account. You make those targets, those milestones, and they doubling up your account and so forth. Um, the only problem with that is a tight stop loss level, right?
Yeah,
Once you get triggered, you have to resubscribe. But again, like I said, it's a good way not to risk your own money in a way, right?
yeah. And last words of wisdom. How can people find you?
Yeah, people can find us through through the website first and foremost, right? www.bulletprooftraders.com. We have a membership site over there where we just I provide um, daily trading content that is directly coming from my own trading activities, right? So basically, I share in real time my trading activities both in the foreign exchange market and the cryptocurrency market through this membership website, membership platform that we have. It's also an educational platform where I teach the cross-decision system and the cross-price trading methodology. Other than that, social media, we're on YouTube, we're on Telegram, we have a signal providing channel on Telegram, uh, exclusively cryptocurrencies. Yeah, so that's the way to find us for sure.
Sweet. Well, thank you very much for
Yeah,
joining us today, Roy, and thank you everyone
it
who
was a
took some
pleasure.
time to listen. Thank you.
Thank you. It was a pleasure, guys.